Hey guys, welcome. I have done a couple of videos today, so welcome to the channel now. Just give you a second for some of you to come in, so that I've got a bit of an audience to bounce off of. So I'll just give you a sec. Stick around because today is going to be an interesting video. I normally stick to very simple things, but today I just want to go into some more detailed technical analysis that are good entry points and good exit points, and what I've found along the years that's worked well for me. So you might learn something along the way, whether you're beginner, intermediate, or even if you're advanced. Hopefully you'll gain something from today's video. Won't be too long. Dinner's on the stove. It's a late dinner, but it's there cooking. So we'll start off with normal Bitcoin for now. There we go. Bit of music in the background. And then what I need is the live chat so that you guys I can keep an eye on how many people are on, who's chatting to me, and yeah, we'll be good to go. So I've got everything all set up. Right. First thing I would say is, at the moment, because we're in a bear market, I've said this before, that bears attack from the top down. They'll come at you and they'll attack from the top. So whenever you're looking at the charts and they're going down, as a bear would attack down, this is a bear trend, or as we've come down a long way and we're on this we've come down this big slope, like we've come down here on this Bitcoin USD. We've come down, and now if we stay down here for some time, then this is like a bear run, yeah, and then this is just a bearish time. As we start traversing along, say for 3 or 4 months, this should just be a bearish area, right? Just like at the time when we were up here, we're in bullish territory here, yeah. When you think of a bull will run at you, he'll charge, he'll put his head down, and he'll push you up with his horns, and that's what it is. You got this run here, this bear run, yeah, but the bear turns into a bull run and pushes it up from the bottom, and then you get this bull run, and then this is all bullish territory here. So that's the bears and the bulls and the history behind it and where it came from, right? Fine. So that's fairly simple stuff. Some of you might know it, some of you might not, but it's something that's there. Okay. Let's for now let us get a blank chart, and I mean blank. So if I go to Bitcoin, sorry, excuse me, BTC, I could use anything, but I want to use one that I haven't used before. That'll do. Okay, fresh chart. Haha, it looks like I've used it. Alright. They're kind of irrelevant now. This was back in the day. Right. Okay. Something that's really important. Let me turn Mr. Brendan Reed Jones down a little bit. Right. Something that's really important is moving averages. They are so important. And the reason why is because they will let you know whether you are going down or up as a trend. Now you might have heard of your trend is the friend until the end, okay? Now that's true and that's said, okay, but the smaller the time frame, like at the minute you can see, like if I get this If I get rid of the Bollinger Bands, actually, the 9 would probably be the best. And I will get that on the chart. Can you see that we're underneath the 9 all the time? So the 9 is pretty much, we're underneath the 9. The 9 is telling us that we're in a bear market. Yeah, we were going down. That's because we're looking at a smaller time frame within the candles. It's only looking at 9 candles back. But then if we bring up another average, let's change the settings in this, and we'll change the settings to something like let's go for let's go up to 200, because that's a big one. At 200, even though up here was bear market for the 9, on the 200 all of this is bullish. So it's not until you start zooming out that you realise that all of this area here, which was all bear market, according to the 200, it's all a bullish market. Well, let's go even bigger than that. Now, instead of changing the values of the EMA to candles, let's change the timing to weekly. Okay, so we'll go to a weekly now. So now what we've got is this is what we've got now. We've got a 200 weekly moving average. So the EMA, exponential moving average, is on a 200, right? Let me just change that over. It's on a 200. Now, never in history, up until June, never in history has Bitcoin ever dropped below the 200-week moving average. So this is official that we are now in a bear market. It's just never happened. It dropped here, but it closed and then came straight back up again. So it bottomed out. This is like what they call a dead cat bounce or a V cat bounce. It literally dropped down and then came back up the next day. So do you take it or don't you? I mean, if you zoom in, what was the close on that there? Is that the one there? Yeah, it is. If we look on it, it actually closed on the line. Look, so it dropped below, but the day closed on the line of the 200 moving average. In fact, here it dropped below it and then came back up the next day. But yeah, so this is just a wick. So it didn't even close here. It did here for these 2 days here. Well, for one day. For one day it closed, and that was on the 10th of December 2018. And then on the 17th, it closed up there at $69, which is quite funny. Yeah, crazy money. If only we could go back in time, eh? All right, and now, hang on, this is a percentage, not an amount. Hang on a sec, we need to put this into price. What have I done here? Why is that not saying price? That's looks like it's talking about market cap rather than what's going on there. What have we done, guys? What's the name of it? It's market cap spanner. Okay, that'll do. That was, sorry, I put Bitcoin market cap. Right. Again, we'll go back to here though. We're in pound now, but the principle still carries, and I'm going to get rid of that fib because I don't think we need it now. Yeah, is that again we closed. It didn't bottom out there. It did on the looks like on the market cap it did, but it didn't bottom out here. Here the wicks turned around and came below, and then now we are officially below the 200-week moving average. This is a very powerful signal. In fact, I would say it's the most powerful signal to say that we are in a bear market in Bitcoin. We are officially in a bear market. Now, this is great news for those of us that have some capital or some money or some kind of maybe a stable coin or something. It means it's a great time to invest in Bitcoin. Just taking away the altcoins for now, it's a great time to get invested into Bitcoin. That's one concept, right? The next one is if we turn around and bring up some indicators. If we bring up the hash ribbons, which I did last time on my last video on it, is that every time we have one of these buy signals, we normally get a rally. Then we had another buy signal, and then we had a rally, and we've just got another buy signal here. The minus capitulation happened. We had another buy signal, so we are expected now for us to have another rally, which would be great because it means that we just have a couple of months underneath the 200-week moving average, and then we'll go up and then bounce back off the 200-week moving average, and then hopefully get this massive bull run, which will eventually overtake where we were previously. And this massive hike here will just look like this little blip here, which was when it was back down at sort of this 16,000 pound mark. Because I've got to remember that we're in pounds at the minute. All right. So first one, 200-week moving average. We're below it. Means we're in a bear market, which is a buy area. Okay. If you look at the RSI, Relative Strength Index, and we just shrink that down a little bit, we did go into an oversold area just here. And everything that's oversold means that there isn't any more left, which means it becomes a valuable asset. So here, when it was oversold, it was a valuable asset. Okay, so that's just looking at that in general. That's the second thing that I can see that tells me that whilst we're down in these areas here and we're below the 200-week moving average, that's two things that suggests that we're in a good place to buy. Got the hash ribbons and the minus capitulation. We're under the 2-week moving average, and we're in the weekly chart. So we're stepping right back. You go to a mosaic and you're faced right onto it, 7 inches, 8 inches away from the mosaic. You can't see it. The further back you go, eventually you can look at the whole mosaic, you can look at the whole picture and go, wow, that is beautiful. And that's what we're doing now. We're right back and we're looking at the picture. And then once we've got the picture and we're using all these tools to our advantage, we can start moving in then and looking for an absolute buy price. And we can get what they call convergence, where everything converges and says, yes, now's a good time to buy. Okay. Whilst we've got the tops, just an interesting point. Whilst we've got the tops just here, we've got this rising channel from the top here to the top here. But what were the tops saying on the RSI at the same point? So just here is what the top was saying just here, and then the top over here was saying that. Now look, one's going up and the other one's going down, which says bearish divergence. And this is what you look for when you're on the charts. You're looking for things like this. You're looking for the strength of the relative strength of of whatever the asset is that you're looking at, whether it's a stock like Tesla or it's a commodity. It could be gold. It could be cryptocurrency. These are the things that you're looking for. So at this point here, you could say, yeah, it's possible that we're going to be coming down quite a bit. There have been occasions in the past where we've had 3 bearish divergence, and then we've had a massive crash. So after the second one, if you get to the chance to get to a second one, I normally come out. Unfortunately, I didn't with this one, and I followed it down. Just a mistake that I made, but it's always a mistake. At that point there, it maybe would have been worth sticking half of your asset that you've made and just stick it into USDT and just keep it there and see what happens. And then you could have bought back in underneath the 200-week moving average. What a gain that would have been. That's sensible. That's sensible money. All right, so we've got the hash ribbons. We're looking at divergences. We're looking at the 200-week moving average. All this is really powerful stuff. Right, we've got that, so we'll get rid of this now because this is a pointless exercise. Now we've kind of mentioned it. I'm going to leave the RSI because we'll probably come back to that in a minute. Get rid of the hash ribbons. We'll put the moving average. Now, next thing. If you're looking for an entry price, again, you to get the absolute bottom, so that you know that you're getting the absolute bottom, you've got to kind of get this convergence of all of these different signs, okay? And there's a lot of powerful indicators, like John Bollinger he designed the Bollinger Bands, which are one of my favorite indicators. When you use the Bollinger Bands with the RSI, that can be very powerful as well. Once the price action drops below the Bollinger Band, and we go below the 70, below the 30 of the RSI, then it's a great time to buy. So at this point here, using the Bollinger Bands, here's a great time to buy, and that would have coincided with that hash ribbon if we were to bring the hash ribbons back up, right? So let me explain a little bit about the Bollinger Bands without going into too much detail. Is this medium line here? This is the 20 SMA, the 20 simple moving average. So you don't need to have a moving average up here. We don't need to change the settings on this and go to 20 and go to a 21 or 20 or whatever we tend to use, because they follow each other quite a lot. I'll change that just to 20. But this is this is SMA, and what we've got here is an EMA, so exponential moving average. And obviously, you know that exponential is times itself by itself, so it's a lot tighter. So whilst it tracks the last 20 candles, it sticks to the price action exponentially. It's tighter, so you'll find that you'll get crossovers, quite a bit. Like there's a cross there and a cross there, as it holds on to the price action more. If the price changes really quickly and sharply, then the EMA will hold on to that price and follow it quicker than the SMA. Okay, that's the only difference between the two. All right, let's have a look at the chat. We've got 2 likes, couple of viewers, and nobody's chatting. Nobody's chatting. Why is nobody chatting? We need to get people on. I've come on this evening. It's 8:30 at the evening, which means in the USA, you guys should be approximately 1 o'clock in the afternoon. So you're probably still at work, but I've come on. You might be on your lunch break. If you are, drop me a like and a little chat there just to show me that you appreciate it. Okay, so that's it. So we've done that. This is if I was on my own and I'm looking at a buying in, right? What I've now got my mosaic. I can see the picture. I now want to go in and have a good checkout. Okay. So here we are now, same asset, but obviously I need to sort of expand it a little bit and find out what's going on with the asset. What I found out from looking at it on the weekly, if you remember, we found out that we were in a definite bear trend now because we're underneath the 200-week moving average. That's done and dusted. We've got that. So now I know that we're in a bear trend. When we go to the daily, I'm now looking at the bottom of a bear trend in order to buy in, right? So I would have looked into here, anywhere around here, because the reason why I'm saying that is because we're down at the daily, we're on the oversold area here, and we're outside the Bollinger Band. And I'm going to look along the bottom here. We're oversold here. We're almost outside the Bollinger Band. I think we're going to get a better price to go in at, and indeed we did. We got a better price here. However, there is a little bit of divergence here from the standpoint of this is lower than this. This is higher than this, whereas this is lower than this. Bear in mind we're looking at the bottoms, so we've got a little bit of bullish divergence there. Hence this bit here. But I think that bullish divergence is finished now, and when we're coming back down to this bear trend, I think we're going to be in here for a little while. I don't think we're going to see a massive rise too much. Okay, we had that buy signal, and that may very well take us up to kind of the bottoms of these and the tops of these. So what's that? 25k. In English money, it might take us to 25k. Let me move over to now we've sort of spoke about that. I'll move to the dollar for you guys because I know most of you are in the States. All right, so Bitcoin USD. So this is what we've got. Great time to buy there. Again, we've got this here is even more pronounced here, that you've got this downtrend at the bottom. And let's have a look. If we just, what I'm doing is I'm just looking here. If you look here, there's some numbers as I move along. They're changing all those numbers. If I just put my cursor onto the very bottom there, we can see that it's 31.76. Remember that. And this one is 29. So this is higher. This is higher than this, which means essentially that's going up while that's going down, which again is you got your bullish divergence. And that happened. I think this is finished now. So now we're going to come back down. So what I'll be looking at the minute as a buy price for myself is anywhere around here, I think is a great place to buy. But I would say that yeah, we need to be coming down outside the Bollinger Band, and down to the oversold area of the Bollinger Bands here. You know what? We might even hit $11,000 before we have a bull run. I'm not quite too sure. Now I'll tell you, which I mentioned on a video earlier, that a lot of what we do as people that are trying to predict the market, whether you're a professional working down at the London Stock Exchange or in New York or wherever it is that you are, we're all trying to second guess nature. I mentioned about the Fibonacci, that you can see it in the stars in the sky, you can see it down to a snail's shell. It's just in nature. It's everywhere we are. So when we look, I mean, these Fibonacci, they call it fibs, but all they are is you just get the Fibonacci numbers, and then you literally that you divide them by themselves, and this is where you get the percentages from. So these aren't Fibonacci numbers; they're percentages of the Fibonacci numbers. But the point is that these Fibonacci lines, they resonate with our emotions. So as amounts of money starts coming down and you get FUD kicking in, fear, uncertainty, and doubt, it'll hit the 618 or the 786, and we'll get a bounce because it's around about this area. Not because there's a line there that we've drawn there as a professional. It's just because when it gets to that point and it bounces around there, people are thinking, I'm going to lose all my money. It's going to go down to nothing. So they take their money out. And that'll either drive the money down, or some big investors will turn around and go, right, we're hitting the 786, the 0.786. Let's buy now just in case we get a bounce. This is going to be a good low. All right. No surprise that at this point here, this $20,000 mark here, which was the big benchmark. If any of you guys remember, it was the big benchmark. It's like when Bitcoin was down at 6,000, 4,000 for ages, and we were like, when it gets to 20,000, when it gets to 20,000, that was such a benchmark. It's no surprise then that now that was such a benchmark that we've come down, and now we're sitting on that $19,000, $20,000 mark. It's become a support because everybody, like you, like me, and anybody else that will be watching this video later on, they will be looking at this and saying, okay, when it gets to 20 or when it gets to 19, I'm going to buy because it's a good amount, right? Now, the reason why I'm mentioning about it is because there is a potential for a massive, massive play on a head and shoulders here, and if that does play out, if we go from the top here down to where the shoulder kicks out, which would be about there, let's get it straight onto that line and make it right. I'm going to make it plumb. There we go. That'll do. And then we clone. And we pull that down to there. There you go. That is the head and shoulder move, which is going to take us down to 14-ish. 14,000. If the head and shoulders plays out, we could see a low of 14.5, 15k. It's not something that I'd want to bet on or turn around and do. I think that anywhere where we are now is a good price. But if I'm going to stick a horizontal array there, because on the 14.5. It was 14.6, wasn't it? Something. Come on. There you go. That'll do. Right. So that line there is, and it's interesting, isn't it? Because if that plays out, and this does end up coming down to kind of the 14.6, that RSI would definitely go into the oversold territory, definitely. And as I say, because we're in this bear market, it wouldn't surprise me if we hit that and everyone then buys back up. And that would converge with the buy signal on the hash ribbons. All right, so we're kind of going in, but that zoomed out the weekly chart that we looked at, that's more accurate if we're looking for long term. If you're going to be hodling this for a few years and you think when's the best time to go, is it going to go down to $6,000 and all the rest of those sorts of figures? It's the 2 week it's the weekly chart and the 200-week moving average that we need to be looking at to find out. As we're underneath that, anywhere underneath that, I would say is a great time to buy, because never in history has it ever been underneath the 200-week moving average. All right, so we're in a good place to buy. All right, so this is long-term trading. So now if we're just looking to trade for a few weeks, for example, then the daily chart, which is what we're on at the minute, is your equivalent of your 2 weekly. I'm going to get rid of that pitchfork as well. Let's delete that. Right. And I'll get rid of this as well. And I don't need that one. That I think is redundant now. I'm going to leave that there for later on. Right. So what's happened now? I'm going to move that. What's happened now is that the daily chart has now turned into what would have been the weekly chart, right? So let's stick the 200-week moving average back on again. So which will be the EMA. Let's stick the settings on. We'll change that to 200. And now we've got an area on the daily. So this is the 200 daily moving average to say that we're definitely still in a bear trend. Okay, so so now we're looking at the daily. In our minds, this is kind of the weekly. This is apart from the fact that we're not looking back sort of like a few years, we're going to be looking back for about a year and finding out what sort of happened in this year. We're still in a bear trend. We're still underneath that 20 SMA of the Bollinger Band. We're bouncing off of right now today. It hit that and it's come back down again. This is a good signal. This medium line here. Normally, once we've kind of crossed it and we're above it, just wait a day to see what happens, and then you might find that you stay above it. Like here, we're below it. The next day, we're below it. In which case, stay out, and then you come out of it. We're on a downtrend now. We're up. Next day, we're up. Okay, so stay in it. Okay, didn't work, so we haven't really lost anything. Maybe a little bit. If you stick with the 21 SMA, overall, you'll win out. I know because I've done it. I went back to 2017 and did it and thought, if I was to put a buy order in every time that it crossed over, would it work? Would it work in my favour? And it did. Okay, so this is what we're doing. So now we've done that. Again, so we're looking at this divergence again. I want that to be a trend line. Yep, so we're looking at this bottom to this bottom here is definitely going up. And we've got this bottom here to this bottom here is going up as well. Not quite as steep, but it's still going up. So we haven't got anything there to look for. And the tops of this are going down. Tops of this, let's change this one to there. Let's change this one to the top of there. Now, as we're looking at the tops, we need to go to the greens. Okay, so I'm going to choose to go to the green here. Okay, and I'm going to go to the green here. So the green here is, again, I'm looking at this number over here. Yeah, it's 33 number. As I go over to here, go to its top, its zenith is 61.56. The zenith on this one is 61.30. 61.71, 61.71. So this is slightly higher. This is slightly higher. So we haven't got any bearish divergent hidden. We haven't got any hidden bearish divergence happening here, which means that there's no continuation of the pattern. If this was the opposite way, then we'd have a hidden bearish divergence, which means it would carry on, which is a good sign for us because it means that the chances of it continuing to go down to these lower lines at the moment, we haven't got anything conclusive. So that's that. All right. So is now a good time to buy, or can we make ourselves, if we go from the bottom of, let's say the bottom of this wick here, if it goes back to there again, how much are we going to make? We're going to make 8%. At this point now, Is it worth 8%? Is it worth taking the risk of 8% if in a couple of days we end up getting a massive spike up? Right? Is it worth losing that? Is it worth losing that massive bull run if it changes just because we want to hold out for 8%, which might not happen? I think round about here it's happened many times. So yeah, I think the chance of it sort of coming down a little bit, and now we're talking, yeah, 1%. Great time to buy on the daily. Great time to buy. 4 hourly. So now what we're doing is we're looking at someone who's going to be trading this for anywhere up to the 4 hours, all the way up to maybe 2 days, 3 days tops. And then they can come out to the daily then if they're in a trade. But we're really honing down now into, where are we? So we're underneath the 20 SMA again. We're still in this bear trend. We're still underneath the 200 moving average, but this is a 200 4-hour candle moving average. So we're still in this bear trend. We're going underneath that, so we're going down. We're going down according to the 20 SMA. So everything looks like we're going down. So what I would do now, thing is there isn't much in the way of fibs, okay? So, but we'll draw the fibs because they are important. And I'm going to go from the wick there, the very top of the wick, just there, all the way down to the bottom wick, and see where we are just there. And not much to play with. And the reason why is because we're looking at the bottom, and the last bottom was over here, and we're taking this bottom here. So let's change this and move the bottom to something that's bottomed out a few more times, okay? And it's bottomed out quite a bit just here. We've got a touch there, touch there, touch there, and a touch there, and obviously we crossed it here. So I'd say this is a stronger fib. We've got more support here than we have here. Not much support here. They were both red. It was a one red candle, and then we bounced up in green. If you look into it, yeah. So you've got green. The red peaked back out of it, and then we're back into the red again, and then the green pushed us back up straight over into the positive. So I'd say that this is probably a better Fibonacci point for us to work with. Now, if that's the case, and we're looking on the 4 hour, then we're still underneath the 20 SMA. I would be looking at a buy order in at 18,655. 18,655 on the 4 hour. Okay, so let's go into the hourly chart. So now we're talking day trading, and there are other when I'm day trading, which I don't do very often, there are other indicators which I prefer to use. So at this point I would go into indicators and I would start bringing out things like the Ichimoku cloud, and I'd get rid of the Bollinger Bands. Let me just hide them. So I'm looking at the Ichimoku cloud to find out if we're below it or above it, if we've got any signals. So so this is bullish, where you've got the red underneath the blue, the Tankan and the Kijun going up, but then we get a line at the minute. So this, and we're above the candle. So we're above the candle with the Tankan and the Kijun, but the price action is in the candle. So at the moment, I would say it's a no trade zone right now. I haven't got the lagging line on because I take that off. No, I have actually. No, the lagging line's there, which is in the cloud as well. So yeah, no trade at the moment unless we get a turnover. So I'd be waiting for the next couple of hours for a turnover here. If we can get a turnover, or we get another couple of candles and this ends up turning green, and the red stays underneath the blue, then that's a buy order in, obviously with a little bit of leverage, as much as you feel fit and you see fit. So yeah, the Ichimoku cloud for the day trading is great, and it's also good if you're for day trading, but it's also good if you're looking at it from the standpoint of are we in a downtrend or an uptrend? And interestingly enough, the Sankan and the Kijun are about to cross just here, and the red is hopefully about to start going underneath the blue. So hopefully we'll have a little bit of a change here, and the price should start going up. And then as soon, mark my words, as soon as this price action goes above the cloud, and we get the Tankan underneath the Kijun, so we get the red underneath the blue, as we go through it, we'll see massive rises. This is probably the third most powerful indicator that I've come across, is the Ichimoku cloud. All right, guys, look, there's been a lot of information there, and a lot of points. Hash ribbons, 200-week moving average is key, is king. Ichimoku cloud, study it, do some YouTube videos on it. I've done a video on it. I think Rockyoutcrops done his video on it, and there's videos by Binance as well on the Ichimoku cloud. Study it, learn it, understand it, and really immerse yourself in the Ichimoku. There's other things. There's the MACD, which is very similar. It's an oscillator, which means an oscillator is all the things that go at the bottom. If I can close that down now because I don't need it. But if I go into here and get this Don Chain channel as well, very similar. But if I go to the what was I talking about? I'm tired. The MACD. Where's the MACD, guys? Oh, I'm losing my mind. My marbles. It's not on there. Where is it? There's the DMI. Where's the MACD? It's there. There it is. Spanner. Yeah, MACD and the MACD and the RSI, they're both oscillators, but they give a very similar story. You can see how we're starting to move up, and here, where we're starting to go into the oversold territory, it goes into the red. So it goes into the oversold territory here, goes into the red, goes into the oversold territory kind of here. The MACD's kind of given us this here. Yeah, and the more we start going towards the overbought territory, the darker shades start to take place. So the histogram, that's what they call that, is very good, very powerful. The lines, I kind of follow my mentor, the guy who taught me. He doesn't use the lines. I understand why he doesn't use them, but at the same time, they can be quite powerful. We had a crossover just here to suggest that the price was going to go down. Price did go down. We had a crossover here to say the price is going to go up. The price did go up. Price says here that the price is going to go down, and the price was going down. Here it says that the price was going to go up, and it went up a little bit. But that's the point. It only went up a little bit. It's not right all the time. So if you get used to using the moving averages on the MACD, if you start using them as your gospel, as your Bible, as your Quran or Hadith, whatever your biblical book is, right? Your Bhagavad Gita or whatever. If you use this as gospel, as fact, then you will at times come wrong and come out of it bad. All right. So, yeah, what can I say? There's a lot of information there. If you didn't understand any of it, break it down, ask me questions, join the Discord. If you don't join the Discord there, tag me in on Rocky's Discord. What you can find in here, let me show you this. YouTube, your channel, and yep, we're going to there. I'm going to mute myself, otherwise you're going to hear me. There we go. If you go down to show more, there's my Patreon there. If you want to give me some money, would be great. But join the Discord, then you'll have me direct. But if you go onto Rocky's Discord, which I think is this one down here. I think this is Rocky's Discord here. Yeah, go onto this one and you can tag me in on that one as well. That's it. I'm all done. I don't have anybody talking to me. I feel lonely. I'm here giving you all this information, and I feel lonely. You've got all this knowledge here. You could be asking me questions. Look at this. I'm in deep in this. I'm balls deep in this currency. Where's it going? Can I get out of this? What's happening to Luna? And all these questions that you could be asking me, and I could be giving you all of my thoughts and things. But there's nobody here. What a shame. But you have got everything that I've told you today. I hope some of you got something out of it, and I hope a lot of you got a lot of it out of it. But I am going to go and get some food now, and I will say thank you very much. Guys, before you go, please do press the like button at least. I would really appreciate if we can get some more subscribers. I need to get to 1,000 subscribers to start getting paid. And I want to make this my job. I enjoy doing technical analysis. I enjoy trading. I'd like to do some live trading where I'm actually on MetaTrader doing my trades, so you can see how I execute and leave them. But I don't want to do that without getting paid for it, because I've lost a lot of money on the way to get to where I am. So to give everything away for free is something I just don't want to do. I don't think that it's right to give everything away for free. But what I've given you there is gold dust. It's gold dust. It's good. It's good information. So like, subscribe, share to your friends. That's it. And with that, I will turn around and stop streaming and say thank you for your time for listening all the way through. If you've made it to the end, yeah. And I will speak to you all maybe tomorrow if I can make it. If not, then it'll be next week when I go to Israel, and I'll meet you in Jerusalem, and I'll do some live streaming when I'm there. I won't be able to have the charts, but I'll be able to talk about the news and what's going on in the economy. Starting my degree next month as well, so I'll be able to be sharing with you my economics degree and all the things that I'm learning there, and that should hopefully massively contribute to the information and the content that I bring out to you guys. So respect, much love, thank you very much, and good night. Bye bye.